Welcome to TVFutures.com. It's Monday, January 28th. I'm Remy Hokie for your Commodities Recap. NYMEX crude oil futures ended the session up above $90 a barrel after pairing earlier losses. The March crude oil contract hit an intraday low of $88.78 a barrel, but ended the session up by 28 cents at $90.99 a barrel on the NYMEX. Meanwhile, other energy futures rose, with February heating oil up 0.74 cents, ending at $2.5265 a gallon. February gasoline futures added 0.71 cents to close at $2.3253 a gallon. Meanwhile, February natural gas futures climbed 11.2 cents to settle at $8.095 per million BTU. And over in the metals complex, gold and platinum futures hit new record highs on the day. U.S. dollar weakness and production concerns in South Africa pulled prices to their record highs. COMEX gold hit a record $929.80 an ounce, and the February gold contract ended up with a gain of $16.40 or 1.8%, closing at $927.10 an ounce. Platinum futures also hit a record at $1,733 an ounce. The April contract gained 48.60 cents to close at $1,728.70 an ounce. Now we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound for MoundReport.com with the week ahead for the week of January 28th. Last week the volatility was at an extreme high, but it's just the beginning of what's to come. This is what we would call the Super Bowl week in more ways than one. Today we start out with new home sales, which rocked the market south, but we've seen a strong recovery intraday. And we're leading into tomorrow's first day of the Fed meeting, and then a blockbuster Wednesday where we get the GDP report, energy stocks, which is almost a non-event at this point, and the second day of the Fed meeting and the announcement that comes thereafter, 2:15 p.m. Eastern Time. And then Friday you have the big monthly employment report. With this type of multiple report week, oftentimes there's so much volatility energy going into it, and a lot of it is let go once the announcement comes out. So you might see a bit of a batting head environment because the odds of the GDP report, the employment report, the Fed meeting, the State of the Union address tonight, all these things pointing in a one-directional trend are very small. So play this volatility, play the chop. Look at things like the euro today up 111 points as I speak. Sell into that rally. Expect the dollar bounce this week. It goes a bit contrarian, but it's most likely going to occur this week. I expect to see the dollar up testing 77 by at least midweek next week. The S&P 500. Don't get fooled by the Fed meeting this week. The bottom line is it doesn't matter what they do. Quarter point, half a point. It really doesn't matter. This market is going to have a negative reaction to it because the simple truth is the market doesn't believe the Fed is in control. And whenever that happens, it doesn't matter what they do. There's going to be enough critics that come in and say it's the wrong move. It's going to create some selling pressure in the stock market. So I'd look at this as a great opportunity to get into some bearish spreads. On a technical level, it's holding a consolidation pattern and overall is still very bearish outlook in that market. In other markets, take a look at sugar. This is a market that had an extreme rally to 13, sold back off. The main reason for the rally was a short covering buyback from this guy who just went under out in Brazil. But they have a lot of reasons to push this market higher at this point. Not only do they have volatility and short covering, but you also have news out of India. They're 2 million tons short on their crop this year. That is a major number that came as a bit of a shock and could be a turning point fundamentally for that market. Take a look at some call plays there. Should pay off in the long run. Gold, silver, crude oil, these are all markets I'm looking to see some selling pressure in as the dollar gains some strength this week, especially gold, which is an extreme overbought high. This is the largest 6-month move we have seen in over 25 years on a point basis and on a percentage basis. We're up almost 45% in gold right now in the last 6 months. It's one of the largest 6-month moves ever. So take a look at buying some put options there. The premiums are elevated because there's a lot of buying of options right now, but it's the right move and it should continue to benefit from volatility in the actual direction that we're playing in it. That'll do it for me, James Mound, MoundReport.com in the week ahead.
That was James Mound from James Mound Trading Group with his commodities outlook for the week ahead. And that's it for your Commodities Recap. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on etvfutures.com.